What's a balance sheet? A balance sheet is a financial statement that shows the company's assets, liabilities, and shareholders' equity. And to keep it simple, assets are what the company owns, liabilities are what the company owes, and shareholders' equity is the amount of money the investors have invested in the company. Why is shareholders' equity equal to assets minus liabilities? Shareholders' equity represents the total value of the shares that the shareholders own for the company, and that essentially equals to the assets, which is what the company owns, minus the liabilities, which is what the company owes. Another way to think about it is how much money the shareholders would get if they liquidated the company, and that's essentially the money they get by selling off their assets and paying off their debts or liabilities. Why assets equal liabilities plus shareholders' equity? Assets represent what the company owns, and it pays for what it owns by either borrowing money, which is what liabilities are, or spending the money investors invested, which is shareholders' equity. What's an income statement? An income statement is a financial statement that reports the company's revenues and expenses and uses that to calculate the profit or loss. So when the revenues are greater than the expenses, you get a profit, and when the expenses are greater than the revenue, this is negative and you'll get a loss. The statement will also give you the earnings before interest, tax, depreciation, and amortization, which is known as EBITDA, and I've done a video on this, so check it out. And it'll give you the earnings after all of these have been accounted for as well. What's a cash flow statement? A cash flow statement is a financial statement showing the cash flowing into the company and the cash flowing out of the company. It's separated into 3 sections showing the cash flows from operating activities, investing activities, and financing activities. What's a statement of shareholders' equity? A statement of shareholders' equity is a financial statement that goes into detail on the shareholders' equity section of the balance sheet. And it's usually divided into these sections: common stock, additional paid-in capital, retained earnings, accumulated other comprehensive income or loss, treasury stock, and preferred stock. Treasury stock is basically the shares the company buys back, and preferred stock is a special kind of stock.